Hey traders, and welcome to Haniva Trade Academy. Most of you are familiar with pin bars and know that pin bars are considered as reversal candlestick patterns. However, you see that this is not always the case. Prices easily pass through pin bars without any reaction. But can we find pin bars that actually work well and reverse the price and trade with them? Yes, but you must meet all the conditions I will mention in order to trade with a pin bar to make a profit. In this channel, up-to-date and advanced price action topics are taught. If you are interested in learning, subscribe to our channel and hit the bell icon. After the intro and disclaimer, we will continue. What is a pin bar? A pin bar is a long bar or spike candle whose shadow is at least 80% of the ATR. This means that the length of the candle must be more than 120% of the ATR. It must also have a noise shadow, and the length of it should be less than 10% of the candle length. If this candle does not have a noise shadow, we never use it for trading. Pin bars must close in the last quarter of their own length. In fact, the length of their body should be about 1/4 of the total length of the candle. In our custom indicator, which will soon be published in TradingView, values of 80% and 120% of the ATR are calculated, and you just need to calculate the length of the candle and its shadow and compare it with these values. We expect a price reversal in the 50% area of shadow. However, this 50% range is not calculated exactly and is approximate. We mark the 50% area of shadow, and in the trigger timeframe, we find a trading knot, which is usually in the form of a pullback or base. We expect the price to return upon reaching this area. In fact, this knot present in the 50% area of shadow is the FTC knot that we explained in previous videos. Of course, pin bars have other important trading zones, which we will explain in detail in the future, and we will also introduce other trading setups for trading with pin bars. Pay attention to the chart. The length of the candle is 44 pips, and 120% of the ATR equals to 43 pips, which is a long bar candle. As we can see, the length of the noise shadow is less than 10% of the candle length. Also, the length of the long shadow equals to 37 pips, which is more than 80% of the ATR of the time frame. However, the price gives a small reaction and passes through the pin bar. Why is that? The reason is that certain conditions must be met for the pin bar to perform best. Stay with me to learn these conditions step by step. So, hit the like button to increase our motivation to continue these videos. Before any pin bar, it is better to have a leg in that time frame. When a pin bar forms in the market, we should see what the movement was before it. Look at this image. We previously mentioned that a leg must be at least 240% of the ATR of the current time frame to belong to that time frame. You only need to measure the length of the leg with a ruler and compare it with the value written inside the table. The length of the leg here is 119 pips, and the minimum written in the table is 87 pips, so there is a leg in the same time frame as the pin bar. Pay attention to this pin bar as well. This pin bar has formed inside a base, and there is no leg before it. In this image, the leg before the pin bar has a length shorter than 240% of the ATR, and in fact, this leg belongs to a lower time frame. Of course, the presence of a leg before the pin bar is not mandatory, and in most pin bars, there is a reaction to the 50% level. However, if there is a corresponding leg before the pin bar, a better result is achieved. Forming at the right time. Pin bars that form in sessions with low trading volumes are not reliable. So, it's better not to trade with pin bars that form when the market has low strength and trading volume. Pay special attention to the formation location of the pin bar. To pay attention to the formation location of the pin bar, you should consider 5 points. 1. Times when the market is compressed and consolidated, and after that, the price moves with a long bar out of this compressed area. Usually pin bars form after these long bars. These pin bars usually do not have trading value. These pin bars are the result of bank settlements and smart money exit. This compression can be like a base or CP. Base explanations have been given before, but we will explain CP in the future. 2. Pin bars that are in line with the movement of a higher time frame have a higher priority. Pin bars that are against the market movement direction are not suitable for trading. Assume the price is moving between two weekly levels. Pivot is formed on the lower level and is moving upwards. This pin bar, formed in the direction of movement towards the next weekly level, is not suitable for trading if it is in location 1. These pin bars are formed for settlement and do not have the power to reverse the price. However, pin bars formed in location 2 are suitable for trading because they reverse the price in line with the movement of a higher time frame. 3. Pin bars that form after breaking a level are suitable for trading if they are in line with the movement after the break. Assume the price has broken the daily level, and in the trigger time frame, which is an hourly time frame, a pin bar is formed. If the pin bar is in location 1, the price easily passes through it, and if it is in location 2, it is suitable for trading. 4. Pin bars that are inside bars are not suitable for trading. This means that if a pin bar is fully inside the previous candle, its trading value is not high. If you do not know what inside bars are, do not miss our inside bar video because we have fully explained profitable trading setups with inside bars. 5. If the candle of the pin bar penetrates a classic level, its trading value is not high for us. If we intend to trade with this type of pin bars, we must wait for the next candle to close below this pin bar. Paying attention to the structure of the formation of the pin bar's shadow in the trigger time frame. After the formation of the pin bar candle, we identify the area of the long shadow of the candle and focus on the trigger time frame to examine how this shadow was formed. We need to examine the price action that led to the formation of the extended shadow. The price action can have 4 scenarios. 1. Both the price movement up and down is sharp, meaning there is no noise in the price movement or very minimal noise. 2. The upward movement is sharp, but the downward movement is not. 3. The upward movement is not sharp, but the downward movement is sharp. 4. Neither the upward nor the downward movement is sharp. In the first scenario, the success rate of trading with a pin bar is 90% because there is an order mentality in this scenario. In the second scenario, the success rate is 50% because the downward movement is erosive. In the third scenario, the success rate is 90% because the sellers have much more power than the buyers. And in the fourth scenario, the success rate is 0% because both the upward and downward movements are erosive. And essentially, the pin bar was formed in a low-volume market. Helpful tips. After all the conditions have been mentioned, it is necessary to say that for trading with pin bars, you can enter a trade in the trigger time frame with a trade knot at 50% and place the stop loss under the shadow or under the knot. Alternatively, you can trade with the break of the trigger line. You can use targets of 1, 3, 5, and 7. Of course, in the future, we will provide detailed instruction on stop loss and target placement. The last and most important point is that on the 50% shadow area, we only enter a trade once, and we do not risk for the second time and beyond. The tutorial on trading with the 50% shadow of pin bars is complete. In the future, we will teach other trading setups for trading with pin bars. If you enjoyed this video, please like and share it with your friends. Feel free to leave any comments or criticisms below this post.